Owls, I'm Vivian from Money Owl, and welcome to our new series called Owl 101, where we try to break down all things personal finance in a simple way without the jargon. Today, we're going to talk about something that we all need to have but often underestimate: emergency funds. If you do a quick search of it online, the internet will tell you to try to save 3 to 6 months of emergency funds. But is 3 months of emergency funds really enough in this economy? Because let's face it, job security is shaky, and emergencies don't exactly wait until we're ready. But first things first, what is an emergency fund? An emergency fund is a bucket of cash set aside to cover your monthly expenses and loan repayments in case of unexpected events. This could be job loss, medical emergencies, major repairs, or even helping a family member in crisis. Ideally, we want to cover 6 to 9 months of essential expenses so that, firstly, you can still meet your commitments even without income. Commitments include paying your insurance premiums on time so that you don't get penalized for missing a payment, paying your housing loan payments on time, especially important if you do have a bank loan where you might get penalized for missing out on payments. We heard that if you're facing financial difficulties, but you're servicing a HDB loan, you can approach HDB for help on this. Secondly, so that you don't need to panic sell your investments or assets at a bad time. Imagine if you lost your job or had to access cash quickly during a market downturn and you had to pull out of your investments when your assets were in the red. In this case, you might have had to make a big loss on your investments. And lastly, so that you're not forced into high interest debt just to stay afloat. Even for the most risk-averse of people, when your back is pushed to a corner and you really don't have a choice, you might find yourself resorting to high-interest loans like credit card debt in order to pay the bills and just to keep things going. Also, here are some common questions we see online about emergency funds. So question 1, should I build my emergency fund before I start investing? Yes, especially if you're new to the workforce or if you don't have a stable income. Investments can go up and down and can be unpredictable. Emergency funds need to be stable and accessible. It's fine to invest small amounts while building up your emergency funds, but prioritize hitting your emergency fund target first, say 6 months of expenses. Second question, should I calculate my emergency fund number based on income or expenses? So you can build your emergency fund on essential monthly expenses, since this is your survival number, not your lifestyle number. What essential includes utilities, groceries, transport, rent, or mortgage. Also consider your annual commitments above and beyond just your monthly expenses. This includes any loan repayments you have, insurance premiums, and your income tax, especially because income tax is paid on your income from the past year and not the current year. Hot tip, if you're a homeowner, keep a few months of mortgage in your CPF OA. That way you have both cash and CPF working for you when you get into an emergency. Question number 3, when should I increase or reduce my emergency fund? Increase it if you're a freelancer and if your income fluctuates from month to month. Increase it if you support dependents. This includes your spouse, children, parents, or other loved ones. And increase it if you're planning a big life change because it might mean an increase in expenses. This includes getting married, congratulations, moving into a new home, or welcoming a new child to your family. Lastly, increase it if your job is hard to replace quickly. This is especially if you're seeing industry-wide layoffs or uncertainty, or if you're on a contract job and the probability of extension or finding a new job is unknown. In these cases, consider building up to 12 months of expenses or more. But can you reduce or pause contributions? Only if you're aggressively paying off high-interest debts, like your credit card debt. In this case, consider having a smaller 1 to 2 month buffer and focus on clearing off your debts fast. The next question is, where should I park my emergency funds? Look for places that are liquid, safe, earning interest, and separate from your everyday expenses so that you don't accidentally use that emergency fund money for your day-to-day expenses. Some Singapore-friendly options include high-yield savings accounts, short-term deposits with flexible withdrawals, and Singapore savings bonds. Though for Singapore savings bonds, do note that they have a up to 1 month notice period for selling. Hence, at least 1 month of emergency funds should always be in a liquid bank account. So how do you even start building up your emergency fund? Alright, so firstly, pay yourself first. Automate your monthly transfers into a separate emergency fund account. Money Owl has a chat talking about how to do it, so I'm just gonna get the team to flesh it up here. Secondly, start small. Start the habit of setting aside money for emergencies, no matter how small it is. If you find yourself struggling to start, pause this video right now, create a new account on your banking app, rename it as emergency funds, and if you can, transfer $100 into the account right now. The important thing is to just get started. Thirdly, keep it sacred. Use that money only for emergencies. If you draw on it, remember to top it up as soon as you can. And also, be realistic. Adjust the size based on your situation. This includes job security, dependents, and debts. If you have high expenses and dependents, relook your expenses to see if there's any way you can cut down on your spending also. I said a lot, so here's a final recap. An emergency fund helps you to survive job loss, repay loans, and avoid panic selling your investments. Aim for 6 to 9 months of essential expenses 12 months if you are self-employed, or if you're in a volatile job. Prioritize building this fund before investing. Don't forget about setting aside money in your CPF OA for housing payments. If this video helped you to rethink your emergency fund, hit that like button and subscribe for more money content. And tell us in the comments below, how many months of emergency funds are you aiming for right now in this phase of your life? Thanks for watching, and I'll catch you in the next one. Bye!